Imagine having the power to profit in any market condition, bullish, bearish, or even stagnant. Welcome to the world of options trading, where strategic moves can unlock unlimited potential. Mastering options trading. Top strategies for success. Welcome to Financial Freedom Journey. I hope all of you doing well. Please do like, comment, and do subscribe for more updates. Let's start. In today's video, we'll dive deep into the most effective options trading strategies that can elevate your trading game. Whether you're a novice or a seasoned trader, understanding these strategies is crucial for navigating the complex landscape of the stock market. First up, the long call strategy. This is the most straightforward bullish options strategy, where you purchase a call option, giving you the right to buy a stock at a predetermined price within a specific time frame. It's a cost-effective way to leverage potential upward movements without committing to buying the actual stock. The beauty of a long call is that your potential profit is theoretically unlimited as the stock price rises, while your maximum loss is limited to the premium paid for the option. On the flip side, the long put strategy is ideal for bearish markets. By purchasing a put option, you gain the right to sell a stock at a set price, allowing you to profit from declines in the stock's value. This strategy serves as a form of insurance against falling prices, with the maximum loss confined to the premium paid. For those seeking to balance risk and reward, spread strategies come into play. A bull call spread involves buying a call option at a specific strike price while selling another at a higher strike price. This strategy limits both potential gains and losses, making it a conservative approach to bullish trading. Similarly, a bear put spread entails purchasing a put option and simultaneously selling another at a lower strike price, capping both potential profit and loss. It's a prudent choice for bearish market expectations. Next, the covered call strategy is perfect for generating additional income. By holding a long position in a stock and selling a call option on the same stock, you collect the premium, which can enhance overall returns, especially in a sideways market. Conversely, a protective put, also known as a married put, involves buying a put option for a stock you already own. This strategy acts as a safety net, protecting against significant losses while maintaining upside potential. For the more advanced traders, multi-leg strategies like straddles, strangles, and butterflies offer nuanced ways to capitalize on market volatility and price movements. These strategies involve multiple option contracts and require a deeper understanding of market dynamics. It's essential to remember that while options trading can enhance your portfolio, it also carries inherent risks. Thorough research, continuous education, and a clear understanding of each strategy's mechanics are vital for success. If you found this overview insightful, don't forget to like, subscribe, and hit the notification bell for more in-depth analyses and trading tips. Share your thoughts or questions in the comments below. We'd love to hear about your trading experiences and strategies.